કંપનીના મેનેજમેન્ટ આપણી સાથે જોડાયા છે. સોનાટા સોફ્ટવેરના CFO જગન્નાથ ચક્રવર્તી. Sir, good afternoon. Welcome to the show. And sir, first of all, we'll start with what led to the sharp decline in IT services revenue on QoQ basis.
Yes. So in the beginning of the quarter, we mentioned that it is a soft quarter for our acquired company Quant System. They were very, very soft in January to March quarter always. Last year also they were soft. This year also they were soft. Only thing is they were softer than what we expected and the cut was a little bit more deeper. We thought we will have a large deal coming in which will compensate the revenue of loss what we are going to have in Quant System, but that deal got delayed. The closure of the deal got delayed. But we have invested, we have hired people on site, we have deployed people on the project and then started doing it from January on the oral confirmation to customers. But the project got delayed. So the cost of the people holding people in on-site was also impacting our margin. And the second is our revenue drop. Sudden drop in the revenue is also impacting the margin. So that's the impact. The revenue drop is mainly because of Quant. Well, it is a soft quarter for them. And we couldn't compensate that with the large deals what we have in our Sonata-based business. And that had an impact of margin and also holding people for the large deal had an impact of margin. What are we looking forward for this in the coming quarters is this large deal closure, there are uncertainties. We are not able to, the whole growth of Quant for the year is as per the original estimate. We continue to hold that. But the second half of the later part of the year, that is July to September and October to December may be a better quarter for them than April to June. We are waiting for the closure of this quarter to know about what will be, how much of recovery the Quant will be able to do in Q1 of this year. So based on that, our margin will improve. And based on that, the improvement will start coming in from Q2 and the second half for Sonata software, that is October to December and January to March will also be good for us, is what our expectation is. And we are expecting positive growth in the coming quarter. There will be no negative growth. We are expecting positive growth. We can expect at least 1% to 3% of revenue growth in the first 2 quarters of the year. And second quarter will be very, very strong growth as we had in the earlier year, last year.
Correct.
That's the outlook for our business.
Okay, sir. So my next question was on IT services, Q4 margins only, but as you have mentioned, so we'll start with guidance. I mean, what can you guide for first half and second half, that's H1 and H2 for the company?
So the IT services, we are actually having, as we mentioned, the first 2 quarters can be 1 to 3% of growth, quarterly growth, sequential growth we are talking about. Second half will be in the similar lines what we are growing in the last year, first 3 quarters. So that is the outlook for us and margin will start improving for us. The only headwind is we are thinking of giving a salary increase to people in Q2 of this year. That may have a headwind for us. The quantum of increase and the timing of increase will be decided once the performance management system is completed, as well as after we have based on the recovery of revenue and profitability in Quant and our base business. But we are expecting positive growth in the coming quarters and we expect better growth in the last 2 quarters.
Okay, sir. So for FY24, IT services growth was 34%. What was the organic growth in FY24 and what can you guide in for?
For FY25, we don't want to give a guidance for the whole year, but we expect the growth little lesser in the first 2 quarters and definitely catch up in the Q3 and Q4 of this year. But we see a medium term to long term, the growth is intact and we are very, very confident of maintaining the lower 20s EBITDA without other income and forex in the medium to long term. There are a lot of pipeline, even in this market, pipeline is very, very strong. There is just a delay. Instead of closing the large deals, normally used to take 6 months to 9 months. Now it is taking 9 to 12 months time to close the large deal. There are some uncertainties. However, our main customer, our large customer, in high tech is actually growing very well. They have a growth path in the coming quarters. We are very happy about it. BFS will recover based on Quant recovery. BFS also will recover. And healthcare sector will depend on the large deals. Once the large deal gets closed, the healthcare sector also can recover. Retail and manufacturing, it is little muted, depends upon the US economy and other US spend situation. This will also improve in the later part of the year. Maybe in the first half of next year, retail may improve. these verticals are looking okay and we may improve in the coming quarters.
Okay. So next, if you can share the details and update on cash on books and what is that and where does it stand at?
Pardon, I didn't get that question.
So cash on books.
Pardon?
Cash on books, sir, currently.
Cash outlook.
Yes, sir.
Yeah, the outlook is very last year there was a challenge in because of the large deals. There were fixed price projects were there. Hence, the accrual the accrual portion was more, and the collection was collection has been good. We are good. Our DSO is maintained very well. However, we saw some impact on the free cash flow. We will definitely improve in the current year with the fixed price projects, the more and more streamlining and the large deals from the transition to the steady state moving. It will be more better for us. We expect this year to be much better than last year.
Okay, so as you mentioned on large deals part, so while the large deals in the pipeline are healthy and you are pursuing 67 large deals, how is the conversion?
The large deals are taking time, but we have not lost anything. The 40% of our pipelines are on large deals, and we are very confident that any business for that matter the win rate is about 40%, 35 to 40%. We continue to hold that, and we are not dropping the win rate at all. But every deal we cannot win, right? So we are definitely pursuing more and more large deals, and we are very confident to will continue to win more large deals in the coming quarters.
Okay, so sir, now 2 points on revenue and EBITDA level. Do you maintain plan to achieve revenue of 1.5 billion by the end of FY26 at an international EBITDA level of low 20s?
Yes. No, we continue to hold that, but no, market situation has changed, and there can be a couple of quarters of delay in that. About 1.5 billion. We said we will reach into a run rate of 1.5 billion, particularly $500 million for international business by Q4 of FY26. That may be delayed by a couple of quarters. What we expect that to say, but we still wanted to aspire for it, and still wanted to focus on it and drive the business towards achieving that. Now we actually the question is now about the profitability. Profitability will definitely bounce back, and we will maintain the low 20s EBITDA without other income and forex. We are very confident of maintaining that in FY26, and FY27 we will achieve the 1.5 billion target.
Okay, great, sir. So now last couple of questions. What is the mix in your deal pipeline between transformational versus cost optimization?
Transformation and
cost optimization.
Okay, so the deal pipeline, there are a lot of opportunity is there in the business now. We have a strong AA pipeline also. AA pipeline of around $55 million we have, and we have already won one AA deal. These are all transformation deals. There will be always any business transformation deals will continue to exist, and for us definitely exist. But also there is a plenty of opportunity in application of AA in the cost saving perspective. And the modernization definitely is one of the important strategy for us in this cost saving perspective for the customer. There are plenty of opportunity, slightly more than the strategic areas, more than that the cost saving areas are coming up now. I think over a period of time there will be a balance between this and that, and we will have an opportunity in both these areas. At present, the cost savings is little more opportunities are coming in, but definitely we see that this is a temporary phenomenon.
Okay, and so lastly, how is the domestic product business?
Yeah, domestic business continue to do well. This quarter is a seasonal impact for them, and every year the fourth quarter is a little soft for them because the third quarter will be a very large quarter. This year, third quarter they did really well, so the fourth quarter was a little muted for them. They continue to hold a good business, and they continue to do a good traction of the business. The IT sector is 40% of their revenue. Because of IT sector slowdown, they are also facing the kind of an impact on their business. But the other 60% of business is doing really well. They will continue to hold. We continue to hold the guidance of 15% of growth in GC, absolute amount of GC year on year. We continue to hold that guidance, and we will be able to beat that in the coming year also.
Great, sir. So you have shared many details on earnings and the company's especially outlook for coming years. Best wishes, sir, for the next quarter, and thank you for connecting.
Thank you. Thanks for the